Good day, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here today. Today is Thursday, the 17th of June, 2021. Thank you for tuning in. Now, here's the thing, guys. Things are really bad. All that money, they are actually increasing the money supply at a record pace of over 20% per year. This is going to cause inflation. Massive. Of course, you guys already know this, but here's the thing. Are you seeing what's happening with silver right now? It's real. Basel 3 is real. And it's really coming in. There's no doubt in my mind now with when I see what's happening with silver and the timing of what's happening. This is not a smackdown, guys. This is the shorts. They're unallocated short positions. The bullion banks are trying to get out of their unallocated short positions, and they're driving the price of silver way down. How low can they take it? I'm just not exactly sure, but it's the end of the game. This is the end of the game. Paper manipulation is ending. Silver and gold, both. That's what you're seeing reflected here. What they're doing is, I'm going to tell you, I was clued in on this a long time ago, that there would be a time in the future, and I did shows on it in the past about how that the rich people are waiting until the final smackdown on silver and that they would buy it all up. I remember doing multiple shows about this, maybe 2-3 years ago. It's here, right now. What they're doing is, this is what the rich people have been waiting for, so that they can buy in physical. And actually, they realize, they don't get rich from being stupid. Who clued me in on this was Jim Rogers. He's doing some shows back then, and he says, no, I'm not buying now. He said, you buying gold and silver? They asked him, no, I'm not buying right now. He said, during that time frame. Now, he's buying. He's buying silver right now. What should you be buying? I'm going to tell you, there's never been a better time to buy silver as they're smacking the price down, getting out of their short contracts. Okay, so let's get in there and take a look at these markets today. Let's open up the charts right here and take a look at what's happening with gold and silver. We're seeing massive drop of $1.06 on silver at $25.89 right now, and it's still going down. This is something similar. What it reminds me of is the oil price. They were giving it away. Quite seriously. If you had a tanker to fill, it was like negative $40. They'd pay you to fill the tanker. Do you remember when that happened? Well, how low can they take silver? I just don't know how many shorts that they're going to try to unload and stuff, trying to get out. They're in a panic right now. This is a panic. What you're witnessing is a panic of these bullion banks, And when the panic's over, probably the end of this month and the start of next month, when this panic ends, then you're going to see the price, well, how high can it go? It's going to be in the real bull markets coming. And so if you get into, this is the time probably to get in, if you could find the bottom of this and not miss it, The thing is, though, it's pretty low right now. They've knocked it down $1.06 today so far already. Let's see what they're doing to gold. $40 down. This is a fire sale, guys. For the real thing, the only two assets that really are the real bedrock or the cornerstone of the world's financial system. I'll tell you, everything is crazy. It's really crazy right now. This is deflationary though. When you see all these things, all these commodities start to drop and everything, and you see the dollar going up, and you see this is deflation, and this is a little bit surprising that all that money printing. Well, the banks. When this COVID crisis started, the banks stopped off an awful lot of their lending, and that's the biggest money creator of them all. The Fed overcompensated for that to a certain degree, for that loss. If they hadn't have, the whole economy would have collapsed back when the markets were collapsing at the beginning of the COVID crisis. You remember that deflationary period? Well, we're deflating right now. How far is it going to go? I'm not sure. The markets, like I showed you guys yesterday, that thing where it flops from one side to the other. They're not going to let the deflation go too far because the deflation would not know where to stop in the end. Because I'm going to tell you what, if you pay off the debt, which is basically what deflation is, there's not enough dollars in existence to pay it off. All the dollars would just evaporate into thin air and there wouldn't be anything. That's what deflation would do if they let it continue, But they know this, and it frightens them more than anything, deflation. So Ben Bernanke, he came out and he said, well, if we get a massive deflation, he said, we'll drop money from helicopters if we have to stop it. And he wasn't kidding around. That's why he got named Helicopter Ben. Now, I'm going to tell you what. They're watching very carefully, the Fed and everything, and they're watching this deflation, and they have a number in their mind. Just like when a person goes to an auction, and they're going to buy a car or whatever. They got a number in their mind that they're not going to cross. If the bids go too high, then they stop bidding, and they drop and they let the other guy have it. If the bids go too high on whatever it is, a piece of art painting or whatever, that's the way it works. Well, the Fed's the same deal right now. They got a number in their mind. They're not in this number in the sand. They're not going to let interest rates go above a certain number, and they're not going to let the markets fall by more than a certain percentage. They'll step in and do something, but they're not going to do what they're going to do until it falls to that point. Do you understand what I'm saying? In other words, they're not going to take action. They're going to try to give the appearance of free markets until the markets destabilize to a certain point. Then when the Fed takes that big action, what happens then? Then we reverse and go in the opposite direction. Your car sitting in your driveway, it can go more than just forwards. You can throw the thing in reverse and go the opposite direction. And that's what the Fed can do. They can throw this whole thing into reverse. But they're not going to do it until they have to. See what I mean? Okay, so let's move on. Let's take a look now at cryptocurrency. Cryptocurrency is been riding along steady at around 1,600 billion or 1.6 trillion, and we're looking at a price that's been fairly stable in around 39,000. 38,995 right now. Bitcoin. Dow Jones down 216 points on the day so far. It surprises me, all that liquidity that they pumped into the system, that the markets still want to deflate right now. When there's a wash of liquidity. So it's actually kind of surprising. But we're in that progressive thing that's, it's a, what do you call that type of a curve? The hockey stick type of a curve. Well, we're way up there on the hockey stick now, and that's what's causing this. Crude oil, 71.51 today. It's down 64 cents or 0.89%. So it's fueling the deflation just a little bit. Well, that's because everybody's starting to drive again. They're consuming more crude and oil and everything. So this would be falling more if people weren't driving so much, But things are starting to pick up. People are starting to use more gasoline. Okay, now let's take a look at the MOVE index, and the MOVE index is starting to go up, 54.28. We can see on the chart here it's going up, even though it says it's down 7.53%. It's starting to turn and go back up again. It's moved above its channel here that it was in. Now you can see a change in direction. It started a day or two ago. Okay, bonds and rates today, and we're seeing fall in yields. We're seeing 1.52 on the U.S. 10-year. But it was in the 1.4 range. Now it's in the 1.5 range, even though it's fell 4.8 basis points. Must have took a pop up overnight while I was sleeping. Anyway, we're in the 1.5s now. I told you guys that this is going to creep up. Now, listen very carefully to what I'm going to say next. These bond yields, because the inflation is going to start to hit later this year, and it's baked into the cards now. Even by their CPI measures, we're looking at probably 6% by their record. They're already up saying there's 5%, but it's probably going to go up to 6% by their measure, okay, before the end of the year. And what we're going to see is this going to have an effect upon bonds. The natural inclination of bonds is for yields to rise, or the bond market basically to lose. You know, yields will rise. Yields are going to rise, and they got a mark in the sand how far they can let this go. And so we're probably going to be about 2% before the end of the year on the U.S. 10-year. As it starts to creep up toward 3%, it'll start to deflate everything. The stock market crash, everything. If the U.S. 10-year starts to creep up toward 3%. What they'll do is they'll react. It's their reaction that'll send us into the hyperinflation. At a certain point, they will react. And the reaction is called yield curve control. Basically, they take over the bond market at that point. They, I mean the Fed, takes over the bond market. And so we got that to look forward to, you know. Let's take a look now at the, and another thing I want to say is I think this volatility to the downside in gold and silver is only going to last to the end of this month. Okay, let's take a look now at the U.S. dollar index, and we can see them all running into the dollar. 91.84, it's popped. The dollar's popped. Listen, guys, the system's very unstable. All these charts I've showed you this morning all point toward instability in the system. Terrible amount of instability in the system right now. Investors don't know which way to turn. They go running out of one thing and running into another thing, you know. And this instability has been caused by the Fed. Basically, what it really amounts to is way back around 1913 when they all met out at Jekyll Island, the big bankers. These guys are professional mathematicians. They knew that what they were creating was a Ponzi scheme. All Ponzi schemes come to an end, and they must have known that. They were smart enough to arrange and put all this together originally to begin with. But they probably knew by the math how long it would take. They probably knew it would take 70, 80, 90, 100 years. And they all looked around at each other and said, well, we'll all be dead, and we're going to profit off of this greatly. And I said, put it through. And when the Ponzi scheme, our future generations will have to deal with that, you know. When that time comes, they'll have to deal with it. Well, now we're here, and now we're dealing with it. It was a Ponzi scheme when it was put together. And I'm going to tell you a little bit of a long-winded story, but I'm going to do it. Okay? When I lived down in Florida and I was a kid, I come across the first Ponzi scheme. I didn't know it was a Ponzi scheme. What they were doing was, it was an earthworm business, what they called regworms, right? And these guys had set up this business, and it all looked really legitimate, you know? But what they were doing was, they were selling these earthworm kits. You buy like 10 pounds of earthworms, right? In an earthworm bed to grow them in and stuff, you know? And they give you a contract. They're charging like $1,000. Now, this was way back in the 1970s. You know what $1,000 was worth back then? That was a lot of money. You could buy a brand new car, right, back then, for $3,000. Okay? So $1,000 was a lot of money. It was like a third the price of a brand new car. What would that be now? $10,000? So $1,000 back then was like $10,000 now. So you pay them the $1,000 and they set you up. And they give you the contract. And the worms would grow. They grow rather fast, too. And you could feed them anything. You could feed them the stuff that comes out of the kitchens, their waste, kitchen waste, and the kitchens would give that away for free, And then they'd buy your worms back off you. So the first people that bought the contract, everything was hunky-dory. Everything was great. They were buying worms like crazy, and they were making all kinds of profit, these people that come in and bought the first contracts, And they'd sell their earthworms back to the people who gave them the contract for like $3 a pound. And then what they would do is take the worms and they would package them up into new kits for new people. People would say, oh, I'm making all kinds of money. I went over to this worm company. It's a big company over there, and they sold me this kit, and I'm selling them back to them, and I'm making great profits, and they really were. And so word of mouth went around, and more people started to come in and wanted to buy these kits. After a while, though, there was more worms coming in. More people had contracts than these guys could sell to new people that were coming in. They couldn't find enough new suckers, And so what happened is they'd fold up business and they'd leave town. Leave everybody holding the kits. That was a Ponzi scheme. That was how it worked. Well, the Federal Reserve is running the biggest Ponzi scheme ever in the history of the world. And what happens when a Ponzi scheme ends? Well, there's a whole bunch of people that get left hanging. Exactly the same thing's going to happen here. Except it's going to be millions of people left hanging. Because this is the biggest Ponzi scheme the world has ever seen. And it's reached that apex point now. Where the runners of the Ponzi scheme leave town. Listen, guys. Thank you for listening to my show. Like and subscribe. And we'll catch you guys in the very next episode. Bye-bye.